If we get clarity and Iran resolves and we solve the quantum issue, I think it could be a great end of the year. But that's like that we need a series of events to break our ways.
Matt Hougan begins by laying out a high-stakes scenario for Bitcoin, one where the future isn't decided by a single event, but by a cascade of catalysts that could either ignite a massive rally or stall the market entirely. He argues that Bitcoin stands at a crossroads, where clarity on risks like quantum computing, combined with geopolitical stability and investor confidence, could unlock a powerful new bull phase. But if those pieces don't fall into place, the outcome could look very different.
Some sort of resolution or clarity on the roadmap to solve the mounting concerns around quantum for Bitcoin as yet another catalyst. I think if we get all of those cards flipping over in a positive way, I think we end up much higher. I think if we get a mix of those, we end up sort of drifting sideways. And if they all come up in the wrong way, I think we could end much lower. So I think I have a view with more dispersion. But like if we get clarity and Iran resolves and we solve the quantum issue, I think it could be a great end of the year. But that's like that we need a series of events to break our ways. So my view is that exactly what you would want to see happen in order to solve the quantum threat is in fact happening, which is highly credible. People are raising concerns, increasing numbers of those people, and therefore the community is focused on it more seriously and willing to weigh the pros and cons. We're in a much better space today from this perspective of preparedness than we were 12 months ago. I don't think we need to have every problem solved. I don't think that's what we need to unleash sort of the OG demand to invest into Bitcoin as we exit the winter and enter the spring years of the 4-year cycle. I think we just need a credible roadmap to solve it. It's not like Ethereum has it exactly buttoned up. They just have a credible roadmap. I think if we have a credible roadmap and commitment, that will be enough to bring along the sort of OG investors back into the market. Look, I think the institutional investors are coming regardless because they realize that they're off market on Bitcoin, that being at zero is no longer a tolerable position. So why we're seeing the flows Ryan mentioned is that they are coming regardless. My point was, like, in order to get the upside above Ryan's 795K, we need to get that OG crypto, retail crypto along for the ride. And I think they will want a defined roadmap. I generally think monocausal explanations are wrong, right? But was it a contributing factor? Yes. Was it as important as just the 4-year cycle and the desire to avoid that historical 75% pullback? No. But was it a contributing factor? Yes. Was it a reason people pointed to justify sort of taking the emotional step of removing some of their exposure ahead of the 4-year cycle? So I think it's a little bit complex, but it definitely was a piece. And I think the level of concern has gone up substantially. And again, I think that's good. I think actually it's the system sort of healing itself. It's kind of nice and interesting to see and observe. But I do think it'll be a catalyst at this point if it gets well organized. I think that's right. The other thing I would add to it is, like, look, let's be honest. It's a nuclear winner in some areas of the crypto market, right? It's a nuclear winner in meme coins. It's a nuclear winner in like alt layer ones. It's a nuclear winner in vaporware apps. A lot of people own those assets. And when they look out across the future landscape of those assets, it does in fact look bleak, because it is in fact bleak. That is different than if you're starting at zero and making your first allocation and you're like, wow, stablecoins and tokenization are scheduled to boom and these assets are down 50%. That's like a completely different mindset than owning this thing that you did your research on, thought was exciting, and it's down 90%. And it's going to fall another 99%. And you just know that. So I do think it's a different perspective.
In one of his most striking statements, Hougan suggests that platforms like Polymarket may become as influential as traditional media outlets like the New York Times, the Wall Street Journal. He even argues that prediction markets were more accurate than polls and media coverage in forecasting major political events. If this trend continues, it could fundamentally reshape journalism, market analysis, public understanding of global events.
Oh man, because they provide new and critical information for the world and they're
Mm,
useful portfolio tools. So let's take those
mm,
two pieces. First, on the new and important information, the higher quality information we have about the economy, the better it can run and function. We're all frustrated that the Federal Reserve is looking at like outward, backward looking data that's slow to update. We're frustrated that jobs numbers get revised plus or minus a couple 100,000. And those directly impact us because that data drives economic decision making at the Fed. It drives investing decision making among investors. It has a huge influence. So if we can improve the quality of data that we know about the
mm,
world will be a better place. And prediction markets do that, not just theoretically, but empirically. In the piece, I point to this paper written by the Federal Reserve that showed that Kalshi, even at this early stage, when it's 1/100th of what it could be someday, is already a better predictor of Fed rate cuts, GDP, CPI, and other statistics than the best economists in the world from Bloomberg, than the Fed's own survey of market expectations. Kalshi is better, and it's doing it in real time, not once every month. So, from a society perspective, the ability to have better information about the economy is just strictly good and will make the economy and the world run better. And then from a portfolio perspective, look, the reality is that the world is influenced by political and economic and other events. And we have no way to express that cleanly. If you think there'll be a democratic sweep in a couple of years that installs Elizabeth Warren as the head of the SEC, that has an influence on what you'll do in crypto. But you have no way to protect yourself from that probability other than just exiting the market. You have no way to hedge that out. And that's a crypto specific example. But imagine you're investing in defense stocks, or imagine you're investing in AI stocks, or you're investing in huge influence. And we don't have the ability to express that in portfolios. So, whether from a societal perspective, or a portfolio perspective, I think they're massive. Are they perfect? No. Are there things that need to be cracked down on? Absolutely. Are there risks? Yes. Are there markets we shouldn't have? Definitely. But net, I think they're a massively positive thing. Yeah, look, some of it is gambling. If you have a prediction market on a football game, that is the same as going to a sports book and betting on a football game. We can call that gambling, and that is fine. But if you have a prediction market on interest rate outcomes at the Federal Reserve, that is the same as the CME's Fed Fund futures market, which trades $5 to $15 trillion in notional value every day from the largest financial institutions in the world. That we would call investing. And it's fine that prediction markets can cover both. And it's fine if you don't do the sports stuff or the cultural stuff, or you don't think there should be prediction markets on geopolitical events. We're like sophisticated people. We can separate those worlds, but there's a huge amount that they cover that's clearly in the area of finance, investing, and hedging. And I think they're really powerful tools. I think that's definitely possible. Look, when we're considering where we might file to launch ETFs on prediction markets, we're not looking at Taylor Swift concert receipts. We're looking at financial market indicators, right? Because that is the area in the market that we serve. So I think that level of differentiation is clear. But I would make an analogy to my ETF days. Look, most of the money in ETFs are in very simple ETFs, holding the S&P 500 or the NASDAQ 100 or bonds. But you could get a 3x levered single stock ETF, right? And that is a crazy thing to own. And what we found in the coverage of ETFs is that the search tools and the coverage clearly differentiate between normal and exotic ETFs. And I think you'll see that kind of thing. So, yes, as more markets get embraced by financial users, I think those will bring those to the fore. I wouldn't be surprised to see a fracturing out of sports betting in particular because there are additional legal suits around that space. We're in the very early days of this. So, yeah, I do think it could differentiate. The other thing that goes unspoken is that the largest institutions in the world have ways to get these odds themselves directly. Like in the past, hedge funds would pay high priced lobbyists in DC to figure out the odds of the Clarity Act passing. I really love that prediction markets surface that for every investor. So there's a more level playing field. So I think there's a sort of egalitarian benefit to these as well, which is really notable and really important. for the sort of fairness of our investing ecosystem. I think that Polymarket should have won a Pulitzer for its coverage of the Trump election win. It was the only place saying what was going to happen, providing accurate information. It was better than the polls. It's better than every media outlet. If that's not journalism, I don't know, man. That was the most important story of that year, whether you're happy about it or sad about it.
Yeah.
And it was the only place that got that right. So, yes, I think a lot of people are going to look as much at Polymarket and Kalshi as they do at the New York Times and the Wall Street Journal to figure out what's going on in the world. And they'll probably be better informed.
Matt Hougan's perspective offers a refreshing and deeply analytical view of where Bitcoin and the broader financial ecosystem are headed. His message is clear. The future isn't determined by one factor, it's shaped by many. From quantum computing risks to geopolitical developments, from institutional flows to retail sentiment, the path forward is complex but full of opportunity. Most importantly, he highlights a critical shift. Bitcoin is no longer a fringe asset. Institutions are already here. New financial tools are emerging. Information itself is being transformed, and while risks remain, the system is actively evolving to address them.